Hey, this is Jack from Alpha Charts with a state of the market video. Today is October 15th, 2022. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right. Also, if you haven't become a super follower yet, check me out on Twitter at AlphaCharts365. I post stuff there all week long. And to my super follow group, I give a ton of added content. Really nice group that we have grown there. So check that out at AlphaCharts365 on Twitter. All right, S&P 500. So the week was obviously began down. And then Thursday came. So Thursday had CPI numbers and the market started to tank, and then buyers showed up and pushed it higher. Gigantic bar. Gigantic bar. Let's just get rid of this right here and zoom in there on that bar right there. Right. Look at this, intraday, it had roughly, 5.61 range, right? Just a gigantic intraday bar. Huge volume coming in too. Good volume right there, right? Very bullish engulfing type pattern. So the next day, the banks reported, and actually in early morning, it wasn't that bad, right? Banks were the big banks that reported, like JP Morgan, they were up. Yet, what did we see? Early morning push higher and then selling all day long. So no confirmation to the upside off of this candle, okay? That is, I think it's significant. But what also is significant is that we have not taken out the low. We're basically, still right there. Still right there. So we have not taken out the low yet. And so that's important too, right? So we're still working on a potential day 4 follow through day, right? This is day 1 right there, right? So we're working on day 4 follow through day potentially. Just watch out for that. There is a chance that we can go sideways or chop around, let the moving averages catch up, and then this can move higher. Let's go into a weekly chart real fast, and just so you know the significance of this area, if you take roughly the COVID lows to the absolute highs, the 0.618 is right here, right? That's kind of right where price is, just so you have an idea of what that 0.618 is relative to. And on a closing basis, price hasn't violated it yet. So this is an area where we may see a bounce, right? I know a lot of people on my stream are very, very bearish, extremely bearish. But so this is where the market kind of surprises us all. We'll find out if that's the case or not, obviously this week, big earnings week this week. But with that being said, this is, there's a significance to this low and this area, right? 35.65-ish. All right. So on the week though, price was down 1.55%. RSP down 1.5, so about the same. And we're seeing very similar type price action in the RSP as the cap weighted, tried to move higher, couldn't, failed, but is holding this general area. And so, and maybe a little bit of a, not that bad of a look coming in here. Again, don't be surprised if we get this bounce next week, at least in the indexes, right? Let's look at the Qs. Widening pattern, expected. Volatility, that's what was expected. And still very strong downtrend. Again, with all these indexes, you have a declining 200-day, a declining 50-day, a declining 23-day or 20, whatever you want, and declining 9-day, 11-day, 10-day, whichever one you guys use, right? They're all declining. So at this point, expectations should be lower. Thursday, big candle, like in all the indexes. So that was a bullish engulfing. So maybe, we get this account again. Anything would be a counter trend rally. So chances are we may get a counter trend rally to the upside. I know everyone, again, it's a culmination of a lot of bearishness that's in the market. It was really demoralizing on Friday, right? Everyone's expecting it to go higher, and then it just totally just came right back in. Again, has not taken out the lows yet. As long as these lows hold, we have a chance, right? We have a chance. Qs were down 3%, 3.11. Equal weighted Qs were down 4.05. So they got smashed even harder than the weighted Qs. But again, have not taken out the lows yet. So yeah, definitely NASDAQ being weak, very, very weak. Let's go to IWM, right? It is working on a potential kind of head and shoulders toppy look here. Again, I don't care if it's a perfect head and shoulders or not. It's a toppy look. Now, if this trend line gets taken out, all right, maybe we're gonna go back up to this area, the 190-ish, right? That'd be a nice move. If you get, 173, 174 to 190, yeah, that's not bad, right? About 10% or so. And that would be considered what I would call a tradable rally right into what? The 200-day moving average declining, right? And then maybe, right, we get there. Maybe this is actually chops around a little bit more, and then price can get above that 190-ish area. And if it does, it'd be above, again, still declining 200-day moving average, but that's how 200-day moving averages begin to start to soften up and flatten out, right? Price above it. We're not there yet, but again, I'm just, I do this in real time. I don't, one take. And so I'm just kind of looking at both sides of the equation. Yes, there's a topic pattern, and good chance we do get rejected here at this 189, 190 area, 200-day moving average, if we do get the bounce into it. But the bullish side is if we could chop around once we get into it and not really make new lows, then we may get a softening or flattening of this 200-day. Going back, where is 200 days from here? Let's just see from the top. That's 235. 200 days is right around here. So, over the next couple of weeks, what are we going to get? We're going to start taking out these bars right here, right? So if price can get back above it, I could see a scenario where we get a flattening 200-day. It's possible, right? Again, am I calling for that? Well, no, right now everything says we're going lower, but those are the two scenarios, right? So we have our levels here, we have our levels here. Everything in between is chop. That's it, chop. So, but yeah, good volume came out on Friday. The area held that we've identified as a very important area. And we've been very consistent with this area for now weeks and weeks and weeks, months now. This is the area, and it's holding. So that's definitely a positive right now, right? What needs to hold is holding. Let's look at IWO, see how that one's faring compared to IWM. Again, try to get above these, did not. Here's your 234s where your 200-day is. Kind of just sucking in, has that toppy look to it. But some people could say we could start to bottom, right? Maybe some kind of, people could call this a double bottom if we break above 250, right? So we'll see. Right now, just chopping within an area as we start to get rid of this data, right? As we start to get rid of this data, and if price can, and I'm not calling for it, but it's very possible that it will come back up, you may get a softening of the 200 and maybe flattening of it. That would be pretty significant, right? That would be real significant, especially with your 50-day not too far away. These would be curling back up. I mean, that's definitely a bullish scenario out there. So don't be all doom and gloom at this point, okay? Because when things seem really dark, maybe there's some light coming. It also goes with the whole idea of an end of the year rally, okay? So again, that's just sentiment type stuff. All right, let's go mid caps, middies. Same idea, significant area. Maybe we come back and we retest this 200-day, and then what we do up here is what matters. Again, this one has held up better than most. So I would love to see this one really kind of take off first. We'll see if that happens. But so far, middies are looking like all the other ones for the most part. Let's get into some of the ETFs. So XLF 30 continues to hold, right? We tried to dip there yesterday, poked down, and it got defended. The 200-week moving average also was defended. And so right now, XLF is digging in where it needs to. Does it continue? I don't know. But again, very, very significant area. I think that we need to keep eyes on this area. It not breaking down is a huge positive. I'm not saying it's not going to eventually, but maybe again, maybe we get a retest of this 200-day, right? That'd be again, around 10% move higher. That'd be fine with me, right? Very tradable area. But right now, not breaking down, that's a positive for the market. Banks reported yesterday, a lot of big ones, and Wells Fargo, JP Morgan, I think Citi did too, I'm not sure. But anyway, very, very I would say they ended green, most of the big banks. Now the index didn't, but the ones that reported up all did. JP Morgan did, I believe. They ended green. Wells Fargo did. They ended green. Did Citi? I'm not even sure. Yeah, Citi did. They ended green. So maybe we get that rally, right? And there's your 50-day right here. That would flatten out pretty quickly if price got above it. So anyway, we have this area now 29.62-ish or so, 29.59. And really, roughly $30 has to hold. Any close below $30 or so, and I think that we're in big trouble. That being said, this is a place where we may get a bounce. All right, let's keep going. SMH, right? SMH, was that an inside day? High was 184.19. High was, yeah, inside day. So inside but down, which I don't like, but lower volume than here. And so what are we seeing? I mean, again, do we get this reversal? This bottom was not taken out. This low was not taken out. Yeah, I mean, I could see both scenarios. Again, there's a lot of pressure going down. That being said, we're now from the 200-day, 38% from the 200-day, right? I mean, last time, let's see, when we were here, this was a bottom. Where were we? Roughly that same general area, 39% from the 200-day. This is an area where we've seen bounces in the past. So just for funsies, let's see what this is. Doesn't seem like it would be as far though. That was about 27% from the 200-day. So the point being is that we're pretty far extended from the 200-day. So a snapback rally within the context of an overall downtrend is very likely. Now, what that develops into, we don't know, right? That we'll only know that after the fact and as we're going through it and seeing what the way price action works. Right now, we can only go so far, but a snapback rally into the downtrend, that is definitely characteristic of a bear market. We've seen it multiple times in the past, and especially when we get this far extended. Keep an open mind. XTN transports. My call was to come back into this area and then potentially go lower. Again, we may get above it, may get above into the 50-day or 200-day. I still think lowers the more likely scenario, but this was a very important area. 2018, 2020, right? Became support, right? So now we're going back into this area, and I can see us going to the 50-day moving average on the equal weighted transports. But overall, still looking weak, right? So all these, they still look weak. Don't get me wrong. I'm just saying that they look weak, but extended from their moving averages, which is where the bear market snapback rallies come into play. Now, here's home builders. Hasn't taken out this low, higher low right here, right? Hasn't taken out this low here. That's actually a higher low right there. And now is the pivotal low for home builders. Again, am I talking that home builders are going to be ripping higher with interest rates, 30-year mortgage at 7%? Probably not. But can we come back and retest, 63.50-ish, and where the 200-day moving average will probably be, yeah, that's very likely, right? Very, very likely. Come back and test this general area again, create that chop, and then we'll see what happens, right? We can't really, we can't forecast anything, but we can say that what's likely, and that's a very likely scenario. Could we continue to fall? That's a likely scenario too. I'm just saying, because we're so far extended from the moving averages, again, just for funsies, let's just see, roughly 39%. And let's see what we're here. That's only 19%. Again, not quite as extended as we were back here, but we do see strong snapback rallies happen within this bear market. So, and getting the proximity of 50-day, and again, it may only get up here, right? 200-day, not too much farther above. So in this general area, I think that's a very possibility. All right, let's keep going and go to my internals. All right, get all this stuff off. Thank you. All right, let's look at the VIX. So if we're going to hell in a handbasket, VIX would be spiking up. Yet yesterday, it didn't. That goes into my whole idea of a potential counter trend rally to the upside. Not only did VIX not go up, but let's look at credit spreads. Credit spreads are being blown out, right? Nope. And where's the rest of my credit spreads? Oh, and do it right. That's why. There you go. Credit spreads. They're being blown out, right? Nope. They sure aren't. So again, this plays a role into the idea of maybe a snapback rally is coming, right? At the least, at the minimum, right? So let's look at put call ratio, right? Everyone's really bearish, right? Nope, they're middle of the road, actually. Maybe even slightly bullish, but we'll call it middle of the road. So this type of chop, it can go either way. We don't have an extreme, no signal, right? And then, of course, looking at breadth, we got down to an almost extreme level, not quite. And now we're just kind of just chopping around here, 18% above the 50-day moving average. That's not good. Again, there's room to the upside, and we saw just in August, right, not too long ago, that we hit actually very quickly 82% above the 50-day moving average. That would happen again. We would see a big, nice move to the upside potentially if we got any type of rally, because 50-day isn't far off from price on most charts right now. So yeah, I can see us getting up to this area again. That's very possible. Very, very possible. All right, and then let's look at Bitcoin. So if everything's going bad, Bitcoin's breaking down, right? Yet Bitcoin is holding this general area since June. It's gone sideways. It's gone literally nowhere since June. And let's just go ahead and put on some moving averages here, because I want to see what they look like. 200, 950, whatever. All right, so what are we seeing here? I mean, as expected, all these moving averages are starting to now to bunch up. Here comes your 200-day here. So a little release of pressure off Bitcoin, and it's above all of its main moving averages. And there's your 200-day coming up down to this 2,500 area. Could we see a move to 2,500 in Bitcoin fairly rapidly? Yeah, I think that's a very possibility, especially that we're not breaking down, right? Buyers are showing up. The support is there in Bitcoin. So I think this is becoming even so much more of a significant area. If we do break down on the way back up, this is going to be a significant area. But if we don't break down, I think that move to 2,500, that's going to be important, right? And that can happen quickly. And then you have these moving average kind of support, technical support. Whether you believe moving averages give support or not, that's whatever. But you have that, at least a confirmation of trend on the short and intermediate term if this does start to move back up. We'll call it that, okay? So in the end, things look terrible, right? Things are bad. But when things look bad like this, and you start, I was on Spaces last night. I was listening to a couple Spaces this week, all different types of people. and they're end of the world calling, things look terrible. Very hard to find positives in this market. And this is where I think maybe we get that counter trend rally, at least to start. And we don't know how far it'll go, maybe to the trend line, right? And this is Qs. So there's a pretty significant trend line. Your 200-day would be right in there as well. That means there'll be a lot of confluence. Who knows if this VWAP would start to come down a little bit? We'll find out. That's VWAP from by the way from the highs, and depending on where you put the VWAP, if I put it here, just wondering, yeah, it'd be closer to 200-day, so that may be more significant. Right now I have it, yeah, absolute high, which is right there. Again, I'm yeah, we'll see. I like this one better just because it ticked it right there, so that makes me happy. And it ticked it right there, so it seems like a little bit more significant, but we'll see. Anyway, point is that don't be surprised if we get a counter trend rally this week within the context of a bear market. If you have trapped longs, there's a place to maybe start to manage risk in a better way to get out of positions if you need to. You could play longs going into it if you need it, if we see confirmation above this 272-ish area. Just be careful this week. Obviously, as in every week, there's earnings season, know your earnings dates. Again, don't be caught up with all the bearish sentiment out there. There is a path of bullishness, at least in the short to intermediate term. I'm talking over the next, 6 to 8 weeks or so. I think that there's a path that could be carved out for a bullish scenario going into 2023. Listen, that's too far for anybody to see. I mean, nobody knows that they're talking about. But for now, don't be shocked, okay? If you like this video, give me a like, give me a subscribe. I do this every week for you guys, so I really do appreciate it. If you're on Twitter, tweet it, retweet it. Thank you so much. Your support really, really means a lot to me. And thank you. You guys have a great week. Okay, bye.